Hello everyone, this is Marc Bongiorno from Metropolitan Capital. I wanted to take this opportunity to let you know that I've been thinking of all of you. During times like this, it is so important to exercise patience and to remain focused. There is no question that we are experiencing unprecedented times. Market volatility, new tax laws, pandemics. However, I feel very confident that together as a team, we will get through this, and we will return to our normal lives real soon. I want you to know that we are keeping a very close eye on your tax and financial needs. This is a responsibility that I do not take lightly. The trust and loyalty that you placed in us over the years is very gratifying. And I also want you to know that you can rest assured that we will help guide you every step of the way during these very challenging times. So please sit back and enjoy this video. The information that you're about to hear, I believe, will be very helpful to you and your family. So thank you again for being such wonderful people. And stay focused, and we are right here by your side. God bless. Before I get to the presentation, I would like to take a minute to remind you to stay safe and please try to always stay positive. We are all experiencing challenging and unprecedented times, no question. But as Ralph Waldo Emerson said many years ago, the first wealth is health. Before I begin, I think it's important for us to review the 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. Even though today's presentation is about the equity markets, as a comprehensive wealth management firm, we try to always consider the impact of any recommendation we make on not just one, but all these areas for our clients. What if I told you a global recession was coming? The United States might start a recession. There was going to be a trade war with China. The president would get impeached, and the Middle East would fire rockets at the United States military base. Would you have expected the stock market to go up? Well, that happened. And despite all of those concerns, 2019 was a healthy year for investors, and 2020 started off on a strong note. Then in mid-February, after making a new all-time high, things changed quickly. A silent but deadly virus quickly decimated an 11-year bull market. After the strong year that was not foreseen in 2019, in less than 3 weeks, the S&P 500 fell from a 52-week high to a 52-week low. This quick waterfall of the equity markets has set many records. Although most experts predicted a reasonable year for 2020, we are now in an unexpected period where it seems as if the economic outlook is evolving daily. Knowledge is power. I believe an educated client is our best client. So let's examine some data. After an 11-year bull market, we quickly entered a bear market. A bear market is defined as when the market falls at least 20% or more from its 52-week high. A bear market's most basic principle is that the bear markets are a part of the investment experience. No question. You really can't have one without the other. Since entering the bear market as of early April, a bounce back of equity markets may have ended this bear market, but we are still in very volatile times and are down from all-time highs. After lowering the federal funds rate by a half point or 50 basis points to a range of 1% to 1.25%, in between its regularly scheduled meetings, as a response to the risks the COVID-19 coronavirus outbreak was creating, the Federal Reserve cut its benchmark's interest rate in mid-March by a full 1% to 0 to 0.25%. When the Fed first started reducing interest rates, many experts noticed that the central bank was catching up to where markets had headed. Now it seems as if they are responding to both the economy and the fact that the 10-year Treasury had fallen to an all-time lows. The all-time low for the Fed funds rate is effectively 0. The Fed has only lowered their rate to a range of 0% to 0.5% twice, once during the financial crisis of 2008 and now again in March of 2020. The United States government is responding by trying to prevent the threat of a recession and help businesses. They have passed several bills, including the $2.2 trillion Coronavirus Act Relief and Economic Securities CARE Act. This emergency relief package is the largest economic relief package in United States history. As if things were not bad enough, the oil price war between Saudi Arabia and Russia, which emerged suddenly and dramatically on March 7th, decimated the energy industry. Oil prices soared, the worst month and quarter in oil price history, down over 50%, with energy companies and oil still being a contributing factor to the overall economy. Oil prices added to the equity markets problems. A bad decision could be very harmful. As this chart shares, the 6 biggest point declines and the 6 biggest point increases in the Dow Jones Industrial Average all came in the last 5 weeks of this quarter. On March 12th, the Dow Jones fell 2,352 points, which was over 9%. Had you sold that day, you missed the next day's March 13th rise of 1,985 points, also a move of over 9%. This level of volatility is unprecedented, and therefore even the savviest of investors needs to proceed with caution. The volatility and turbulence of this current economic and political environment has caused even some of the most seasoned investors to become skittish. In March, legendary investor Warren Buffett said that he hadn't seen anything like the coronavirus pandemic. Bespoke explained in a post noting that the average stocks in his top holdings on March 24th were down 37% from their February highs. Perhaps the most important thing to think about is that, like everyone else, his portfolio obviously hasn't been immune to all this volatility. This is a good time to recall one of the most famous quotes. The stock market is a device for transferring money from the impatient to the patient. How should an investor approach the rest of 2020? We advocate being prepared and not scared. How should an investor move forward? One of our responsibilities is to look at all situations and guide our clients with ideas. Even a treacherous downfall has opportunities. Let's quickly review some of them. Thinking long-term is still the way to look at equity investments. Typically, the most successful investors think and act for the long term. It's near impossible to predict exact market movements. However, you can prepare. While no one likes losses, from a tax standpoint, they can be helpful. A tax swap, for example, is a strategy that involves selling an investment that has losses and replacing it with a similar but not identical investment. The tax loss can then be used to offset gains, or it could be banked to offset future gains. There are some rules to understand, like the wash sale rule. So if this is a strategy you want to discuss, please call the office and we'll be happy to go over in more detail. Remember what we do, folks. Metropolitan Capital is a full-service income tax and financial planning firm. And that's one of the benefits that you will have working with us, is that we do everything under one roof. We bring a lot of value to our clients, family, and friends. Maintaining a properly designed and well-diversified portfolio is important. Now is a good time to look at your portfolio and consider any rebalancing that may need to be performed. For many investors who had a 60-40 stock to bond portfolio a few months ago, this percentage may have changed in the past few weeks. For some investors, this could include selling things that have risen and buying things that have fallen. This can sometimes be a good opportunity to invest at lower prices. The required minimum distribution for 2020 on some retirement accounts has been waived. Some investors may not need to take distributions from their retirement accounts at this time. If you are comfortable with suspending distributions and looking for a potentially better time to take them, please call my office and we could see if this strategy works for your personal situation. And again, folks, keep in mind, everything that you do financially affects your tax return. So it's very, very important that we pay very close attention to that. Though they can be complicated, there are many reasons to consider Roth IRA conversions. Depending on who wins the presidential election this year, or how much the government injects into their stimulus, there is a chance that for some investors, tax brackets may rise. Also, for many retirement accounts with equities, account values are down. This can create opportunities, especially for those investors currently in the 12, 22, and 24% tax brackets. Another reason to think about the pros and cons of Roth IRA conversions is the new Secure Act, which changes what we know about inherited IRAs. As a reminder, on December 20th, 2019, a major piece of legislation known as the Secure Act was signed into law. The new act brings massive changes for those of us with retirement savings. While I'm not reviewing the Secure Act today, it has a new 10-year rule that now says that most inheritors can no longer stretch out their inherited IRAs. They now need to plan to take out the funds within 10 years of the date of death. That means we should review your retirement plan sometime this year and look into the family tax management of you and your beneficiaries. The deadline for filing 2019 income tax returns has been officially changed to July 15th, 2020. The deadline for making 2019 IRA and HSA contributions has thus also moved to July 15th, 2020. Deadlines for contributions to workplace savings plans have not changed. Please check with your state for any changes to state filing deadlines. Equity market volatility is back, and it could be scary. That's why we always say, proceed with caution. Fear sells, and everywhere you look, the media magnification of the current financial crisis is putting a major emotional strain on most viewers. During these times, it is important to resist the temptation to watch news reports and obsessively watch your portfolio performance. Sometimes the more information you have, the more likely you could make a decision that deviates from your long-term strategy. Adhering to a long-term investment plan often requires taking the news with a grain of salt and putting the impromptu advice of others on the back burner. Remember, panic and bad decisions can cause more harm for investors than a virus or downturn. As a recap, what are some of the key takeaways for the investors? 2019 produced strong returns for equity investors. Extreme volatility has reemerged. Your health is our first priority. Continue to focus on your personal goals and call us with any concerns. So what can you expect from us? Well, you can expect regular communication, more frequent discussions, and you could expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. I want to thank you for your time today. Please remember, your health and well-being is our highest priority. We appreciate the opportunity to assist you with your financial needs. We would like to help others in 2020. In fact, we would be honored if you could share some names of friends to add to our mailing list so that they can benefit from our information. With that being said, I would like to introduce you to a very, very special person, Alex Hellinger. Alex is a mom, entrepreneur, health coach, nutritionist, and flight attendant. She spent the last 30 years helping people just like you and me reach their health and fitness goals and lead a more fulfilling life. Once again, I thank you, and here's Alex.
Hello, everyone. Thank you for having me. If you're like most people sitting at home, anxious, overwhelmed, and concerned about your overall health, especially during this time, you need to take action right now. Studies have shown that high levels of stress, along with bad eating habits, can be devastating to your health. I'm Alex Hellinger. For over 30 years, I've helped thousands of people just like you and me gain control and live a healthier lifestyle. Let me teach you simple techniques and share with you important tools to help you reach your health and fitness goals that will change your life forever. Learn why my clients have been following my advice for decades, proudly recommend me to their family, friends, and coworkers. The time to take control over your life is now. If you would like more information and some free tips about my nutrition and wellness programs, feel free to contact me. Thank you for this opportunity and stay safe.